Hey, Peter Spina, how are you? Thanks for joining today.
Yeah, and great to see you, Michael.
You too. It's been a while that since we've talked, so I'm looking forward to chatting with you a bit.
Likewise.
Congrats on the newborn, by the way. That's exciting.
Thank you. Yeah, it changes your perspective of your investing perspective, your risk tolerance, and different things. It's kind of interesting to see how you start to adjust to that.
For sure, for sure. So you have two now?
Yeah, on the second, and yeah, two energetic boys. So
Awesome, awesome. So yeah, we exciting times in the precious metals market right now. I think probably the most exciting time we've seen since 2011 or so. Tell me what you're seeing. What makes you excited about this space right now? Um, yeah.
yeah, yeah. I think you're right. This is the most exciting time since 2008 2011 period. Price wise, the gold market hasn't really accelerated like we saw the last round. It's in the process of breaking out, a significant breakout, a well defined technical breakout. But I would say this is actually even more significant and a lot more um, dangerous than the last event, which took gold prices to a record price, nominal price high. This time, you have the prior problems which weren't resolved. They patched things over, lowered rates, pumped up the asset bubbles, created this pretentious wealth effect, and so on. But this time, my gosh, this is a totally different ballgame. This is the U.S. dollar is in the center stage, and the global, it is the ultimate currency. It's king currency. No one's going to debate that. But this is being challenged. The recent events, which I really believe kicked off in this has been something that's been building for a long time. But in 2022, with the start of the Ukraine war, this really accelerated and changed the timelines, and things have been moving a lot more aggressively since. So I think the result now of the higher record gold prices is a culmination of various factors, but it's been accelerated now with the war, this proxy war, which has spilled over into different realms.
Yeah, now we got Israel and Iran. That's fired up now, so that's a scary moment as well. So it doesn't look like war is going to go away anytime soon, which is obviously really bullish for precious metals. But tell me what you
Mhm.
think about the current war and where you think that's headed. And I mean, obviously, it's not looking good right now.
It's very dangerous in that you have some individuals, some characters with that are in power that have some very strong ideologies or very extreme. Obviously, with like Netanyahu, he's made it very clear, with his intentions with Iran, and how he wants to resolve things. Iran isn't some. It's not the Palestinians. This is not some. It's a totally different ballgame. And Iranians, as we've seen demonstrated in their war in Ukraine, they have some superior technologies, especially when it comes to drone warfare. Not that Israel, they're right up there. So you have two superpowers fighting over in this very volatile region. You have the war in Syria that continues. You have Yemen. You have this whole area that's a hot spot. But this is a very dangerous situation because it's been boiling and boiling, boiling, and now it seems like that lid is coming off. Will the restraints be put in place to prevent a greater conflict? There's a lot of parties. There's the Chinese, the Russians. There's various different influences on what they would like to see happen. But I think the major superpowers are trying to call for some restraint. But it doesn't seem totally black and white. It's like having been out of the United States for quite a while, you kind of look inward and you kind of see, well, there is a resistance against what's going on within like the Democratic Party, which is surprising because that's a highly, um, you know, most American Jews are Democrats. 90% of them are, but in this situation, they're going against the Israelis here. And it's tearing the political situation apart, and the politics have gotten involved, and there's a lot of different angles. It's election year, so there's a lot of factors. I think they're going to try to calm it down. I fear the people who are involved that they'll do something more extreme, but I think it'll kind of somewhat settle down. But it all pushes this colder war that we're in. It's like the Cold War, but they branded the Colder War, these two dividing sides, and it's just pushing people further apart. But it does put a lot of issues at play. There's, before this started, Saudi Arabia and Israel were coming closer together. There was some hope for some peace, and that's just been all blown apart. So it's very volatile. It adds to the issues. I think um, there has been some risk premium in the gold price related to this, but I don't think that it's been that much. I think more of what's going on between other situations are really the key driving factors here. But it should, it can't be dismissed. At any point, like we saw recently, it can really blow up. Thankfully, there was more like a symbolic drone strike on Israel, and Israel did a symbolic strike back. So it was kind of like, okay, they agreed to not escalate. So that's the first good sign. But then we saw recently today that Israel took another 20 shots at sites at Hezbollah, and so it's a tinderbox, and at some point it can explode again. And right now, with the people who have power, I don't fully trust them. So hopefully they can be restrained.
Yeah, so there's a lot of people who think 2024 is going to be a year that we look back on, like a lot of fireworks potentially to happen, not necessarily with war, but in the financial markets. What are your thoughts on the rest of 2024? Do you think this is? I know it is an election year, so I don't think they want it to get too crazy. But what are your thoughts on the rest of 2024 and what you
Yeah.
expect financially speaking?
Well, it's kind of interesting. You say they don't want too much during this year. They're trying to delay things that are boiling underneath. Was it back December? They were talking about several rate cuts for this year, trying to give optimism, some hope to the markets, and kind of keep this thing extending. At the same time, insiders are dumping stock. They're, these bubbles are getting out of hand. These fake asset bubbles that they've been pumping, and which is a big problem because inflation isn't coming back down. And one of the driving forces for this inflation is all this pumping action they've been doing to different markets. So they got to contain it. They're stuck. They've got another round of inflation. They can't. Really can't really cut rates. They can't really raise rates. And even though the economy has held up better than I think most of us would have has expected, it's been a little more resilient. The effects of these rising rates, the cost of living, inflation, it starts to eat away. And there are definitely some problems out there that we probably are not aware of right now. I question what the gold price is indicating. Is there a credit event? Is there a credit default? Are there other issues brewing? What we don't know for sure, because they talked about a couple of weeks ago huge mystery buyer or buyers in Dubai buying up all this gold.
Yeah.
We know the nation states and so on are doing that, but yeah, there's definitely a sense that things are not as stable and the risks have increased. So this year, I think a lot of that is starting to, you can't really hide from it. You're getting more recognition of these problems. You're getting other individuals are repositioning. But I think in the West it's different. I think most people in the West are still pretty, they're not paying attention. They see Nvidia running up, right?
You're right.
Crypto's going up again. Things are the markets are relatively okay. So yeah, they're not really paying attention, but the rest of the world, they're behaving differently. And of course, when you are living with the supreme imperial dollar, which has been able to mitigate some of the inflationary problems the rest of the world has seen, well, yeah, people are not paying as much attention.
Yeah, I think the one thing that's kind of sounding the alarm bells, in my opinion, right now is the 10-year Treasury. I think that rate has been going up fairly quick in the last few weeks and months. Maybe
Mhm.
touch on that a little bit and what you think that foretells to the world.
Yeah, well, it's a big problem because you have various things, and maybe it's good to go back to 2022 when the dollar was weaponized, when the U.S. Treasury bonds were weaponized, when SWIFT became also weaponized. So when Russia had the central bank had was it $300 billion of their assets reserved. Dollars like that can be frozen unless you have the physical cash in your hands, which I think when I looked it up in 2022, I think Russia had like $10 billion in cash. The rest it's just all electronic. So with the flip of a switch, if the empire wants to shut you off, it can do that. And it has restrained itself mostly from taking these kind of measures. So when you do take such a measure against a world's large superpower like Russia, um, there's consequences. Their ally. China's an ally. I know Blinken just landed in China a couple hours ago, trying to threaten the Chinese to stop doing business and supporting and trade with Russia, which is he was greeted without a red carpet, without any official government officials showing up to welcome him. So you just see that the world is the U.S. is still threatening and it's taking these actions, but the rest of the world said this is enough. So places like China has said and this isn't something that just happened overnight. They made this. This is something 10 plus years ago. They talked about wanting to de-dollarize, not to have such a huge position of treasuries and dollars. So since the war started, that they've been de-dollarizing faster. They're selling off treasury bonds. And where do you go to after that? That's the big problem. So gold is really the only real true competition to the dollar as a form of currency, as a trusted form of currency. The euro has its problems, and it's still part of the euro kind of dollar, US dollar, euro system. So it's really kind of a dividing line. China, Russia, BRICS nations, rest of the world said, we've had enough basically, and we're trying to find a way out of this imperial dollar system.
Yeah, and then you also had the European Central Bank, come out recently and say they're going to be lowering rates as well. I think the Bank of Switzerland as well. So, I mean, it seems like this is the rhetoric across the board that even though inflation is getting higher, the rest of the world wants to continue to lower rates to ease and to keep price values high. And what are your thoughts on that? And do you actually think this is going to happen?
Maybe in other parts of the world they can do that. China's easing. Japan isn't. They've got a whole different problem going on. The yen is in a series. That's a whole thing. Yeah, decades of manipulation is unraveling there. But what's happening? Things are happening so quickly right now. I think with the wave of inflation that's coming right now, I don't think the Fed is going to be able to drop rates. So the rates are going to be stuck up here. If not, they may actually have to raise rates to contain this inflation wave.
Right.
That's going to really start causing problems in different debt markets. But I think something you just said that should be considered, and this happened before with I think, was it SoftBank last year with the banking crisis, the rate at which these treasury bonds sell off happened at such an aggressive rate that there was huge losses incurred very quickly. And seeing this latest bond sell off again, a lot of people said, well, 5%, that's it. The rates are going down. We peaked. 6 rate cuts coming for 2024. That's not happening. So there are some losses out there. And if the bond market continues to weaken and you don't get support from all the international sources, at the same time, I mean, it's just absolutely insanity what's going on. The deficits are exploding. The debt is huge. The interest rates, the cost of servicing the debt is huge. We're borrowing money basically to pay the interest. The whole thing is starting to really crack. It's starting to fall apart. So I don't know how they really manage it. One thing that I do think is possible is if the rates really start to rise on them and they can't contain it, they're going to have to come and step into the market somehow to prevent a real rate spike, or they try to force a market sell off and you get some issues between banks, interlending issues. You get credit default swap risks starting to rise and credit risks start to rise. Then you have rush into the treasury. So maybe that's one way to prevent it. But those are just little tricks. Eventually you have to face the fundamental problems of what's going on. And no one wants to address that.
I don't think they ever will. I mean, in my opinion, I think so that's the interesting part. Last time we saw bank failures, I think the 10-year got to around 5%. And here we are again, heading right back there again. So do you anticipate more bank failures in the U.S. or maybe in other parts of the world this year?
Yeah, you see there's difficulty in the commercial real estate market, some huge losses. There's some big losses out there. I think we'll see some of the banks, not as large ones, those regional banks were the ones that were showing the problems.
Right.
Last Friday, a report came out and it showed that over 1,000 in 82, I think it was 1082, whatever, over 1,000 different banks and
Yeah.
financial institutions hit up that emergency Federal Reserve program, which I think it
Was
had a
that
couple $100 billion.
was are you referring to the repo market that ended that
No, not
funding
the
for the
repo market. It
oh,
was a
completely
special
different?
bank
Oh,
facility they did after the last banking crisis, and it's
gotcha.
ending. The last ones, it's like I think a year term. But yeah, it showed that there was quite desperation to get some liquidity,
Uh-huh.
and this is after with really strong economic GDP growth and all this post COVID bubbles and liquidity and low rates pushing all stuff. So that's wearing off. Things are it's going to be a lot more difficult for people this round too, because the inflation, wages were doing very well the first round. Inflation was up, but wages were doing fine. Stocks were doing very well. But if now we get a stock market, assets, real estate market in some parts of the U.S. Maybe it's still rising. Some parts have not. Luxury is starting to come off
Uh-huh.
high. The stock market were to sell off. Inflation keeps rising. Wages don't. The job market gets weak. People are really going to start to feel this. And you see it in different ways. Like I was talking about real estate a couple of years ago. We had in Colorado, I saw where I'm from originally, they had 2-3x's on some of these homes. So what happens in 2 years when they do an average trailing price for your real estate taxes? Well, all of a sudden, all those, huge price increases that made you feel rich. Well, no longer. Now you're paying literally $5, 10, $15,000 a year. I mean, people in New York City and Long Island, they pay like 15, 20,000 just for a middle class, normal size home. So these things start to really eat it. Healthcare, car insurance premiums, healthcare, so on. So the quality of life, people's standard of living is shifting. That I think is quite apparent. This era of living cheaply at the expense of the rest of the world, the U.S., the Americans, I think we've had quite a nice run with the imperial dollar. A lot of that really comes down to the dollar strength. Being able to buy all these cheap goods from around the world and export our inflation while the rest of the world takes all of those savings and plows it back into treasury bonds. So if the treasury market, the bond market is going to a long-term bear, trend, because and pretty much since I was born and over the last 4 decades, it's been a bull market. Most people
Exactly.
and you see that correlation a lot. It's like, look at rates in gold, look at rates in gold. Well, yeah, look at rates in gold in the 1970s. Yeah, they correlated very well, but during the period where there were many issues, and right now, I think the key is the treasury market is no longer a safe haven, a go-to safe haven. Like
Right.
they call it a safe
Exactly.
haven, which I find it hilarious. A debt market, yeah.
Yeah.
Well, trying
I
to
mean,
equate it to gold.
it has been for the last 4 decades for sure, but I mean, that's what people forget. I mean, everybody's so bullish on real estate historically speaking. They just feel like that's where they want to put their money because it's been such a great investment for several decades now,
Mhm.
but that's only because interest rates have been coming down that entire time, and now we're starting to see that reverse. And
Mhm.
that's the risk for me. I think this next decade is going to be terrible for real estate across the board, and people don't really understand that, and they forget about that decade in the 1970s where stocks
Mhm.
performed very poorly and real estate didn't do too much, and gold and silver were the big winners. And I truly believe that this is the decade we're in now, where you're going to see precious metals continue to go to the upside, and you're going to see extreme pressure on real estate, traditional asset classes like real estate, the bond market, and the stock market. Do you have the same expectations where we're at
I,
the
I
beginning of a huge commodities bull market?
I think so. I think you're dead on. I think that's exactly it. It's everyone's been conditioned to believe and act the same way, that they don't see the trends are changing, and they don't understand. They haven't been around. Maybe
Right.
my generation, we don't understand the different.
Yeah.
It's we've been trained to just buy. But obviously the metrics are showing. You're in Canada, correct? Right.
Yes.
That's so your real estate market is just absolutely out of whack. Just absolutely out of every sort of norm. So, compared to the U.S., it makes the U.S. market not look so bad. But you do see it, and this is something that I picked up from a friend in Colorado. He's a middle class, has a good job, but even making $70,000-$80,000 a year is starting to become a struggle for a middle class family. Like that's to
For
me, that's
sure.
insane. And that's really been felt over the last few years. And their main issue was the price of food has gone, it's really going way up. Um, the price of everything, just maintaining the home. So that's one thing, is if the price of the real estate doesn't go up 2, 3, 4% or whatever it is a year, the maintenance costs and the cash flow that's going into it, you're losing money. So yeah, I think renting, it makes a lot more sense.
That's what I've been trying to tell a lot of people who are middle class, who are strapped for cash, living paycheck to paycheck, sitting on this house that went up 100, 200%. Okay, well, maybe now's the time to cash that lottery ticket in, and
Mhm.
start to use those funds into different types of assets, such as precious metals. Um, I don't know
Yes.
what your thoughts. I'm a big believer in renting right now, and I don't
Mhm.
mean long term renting, but at least until things settle down, and at least it gives you an opportunity to actually make some money on some of these investments that we're talking about that are going to appreciate in this environment as inflation continues to go higher, as the economy continues to slow.
hmm I think so. Your real estate can be a bit of a liability if you lose your job, and the way that people live in the United States, it's really a paycheck to paycheck situation. Vast majority of people cannot survive any serious financial, unexpected financial bills or problems. And this is with a really strong economy when everything is supposedly,
Yeah, we're
pretty
not
good.
even in a recession yet,
Right.
according
We're
to
not
them
even.
anyway.
What is going to happen? Yeah, the real estate market seems extremely, dangerous to me. In 2005, when I first kind of got out of college, I had looked at real estate, and by 2007, 8, I had almost bought a house, bought a condo. I looked at various things. They were, rates weren't too bad, but I decided to rent because the rent was extremely attractive. It would be, a place that I could rent for 1,000 something a month would cost me almost 2,000 a month in equivalent everything. So
Right,
for that difference was a huge amount of savings, and I invested that, and I hit a nice trend in the gold and silver, especially in the mining stocks back then.
for
They did
sure.
very well.
Yeah,
So it was a good timing. Now, because with the family, do want a place to kind of settle down. So
yeah.
that's kind of getting living within your means and not over leveraging yourself in real estate. At least having some sort of home base. That's the most I can see it. But I wouldn't do it in certain places. I would not go buy in a hot market because you could really have you could be sitting in negative equity very quickly.
Especially in Canada. I mean, in the U.S., you can actually lock in a rate for 30 years, but in Canada, you have to renew every 5 years. So a
Yes.
lot of the people still haven't seen that increase in their mortgage payments because their mortgage hasn't renewed yet. So a lot of Canada, over half of them, still haven't felt that pain, and they're about to. So I mean, Canada. I mean, we're already broke. I mean, we're paycheck to paycheck is at best. I mean, when these mortgages renew at a rate that is much higher than it is that they signed in at, I mean, the Canadians are the ones that are going to feel this pressure of the rising interest rates a lot more than the Americans. So it's even
Mhm.
scarier for Canadians. Um, so I don't know how this is going to get better. To be honest with you.
No, that you have to take some pain if things are so out of whack, and that's why these central banks there's and governments, they're so anti-free market. A recession is such a natural and healthy process. The analogy I think I heard was like a forest fire. You have to get rid of kind of the weak. You got to get rid of the excess inefficiencies in the economy, and instead, what they do is they promote it. They
Uh-huh.
promote things that should get cycled, recycled. Get rid of it during difficult times. They're very unnatural forces, and just like under communism, that's basically they did the same thing. They subsidize inefficient. They just kept trying to make something that was broken work until the point where it just couldn't work anymore. And that's where it feels like a lot of things are starting to happen, are headed. And in Canada, really, if you feel like a step ahead, and those adjustable rate mortgages are time bombs. That's horrible. The U.S. definitely has got an advantage with that. And here in Europe, our mortgage here is also it was a struggle actually to get a 30-year term with a 5-year arm. Otherwise, it's 3 5 year arms and 15 years, 10, 15 years. But they don't let you get loans here as easily. You got to have 20, 30% down, and it's a lot more conservative. So, but even then, it's like you can see also people here who took, loans out right before the market peaked. yeah, those arms come in and 1% becomes 5, 6% suddenly because rates were here extremely low. I mean, we had zero, we were the last central bank to cut rates to 0%. The Czech Republic, by the way, it's in the EU, but we're not on the euro, so we're kind of like this. Well, not like the Swiss because the Swiss on the EU, but
So
we're a bit.
you're living in Prague, right?
Yeah, I'm in the Czech Republic in Prague. I've
Okay.
been here for about a decade now, and yeah, it's a bit unique. I really love the Central Eastern European mentality because the conservative nature of the people who went through very difficult times, and I got this from my parents.
Uh-huh.
Their parents were born in into horrible times, whether it was World War I, World War II, and then communist era came here, and people just they had to save everything. So they're very conservative people. Even the governments, the debt to GDP levels are like 40, 50%, where what the US is 135% or something. It just these are numbers, and those are real. Those are the numbers you need to really look at in the end to see where this all breaks. You look at Russia, they're I think 18, 19%. So it's like when I was I don't want to laugh at it, but it's just like, are we that stupid? 2 years ago when I was listening to all these neocon puppets on mainstream media trying to pump all this propaganda into their consumers who don't know any better about how weak Russia is and how their economy is going to collapse and how Putin's going to get taken out, and they're just selling this nonsense to people. And unfortunately, too many people ate it up. They're starting to see the light, but I don't want to get that's just a horrible, horrible war. But that you got to understand, yeah, even like when it comes down to the Russian mentality or the Chinese mentality in other places, like these are the people we're competing against, and they have a lot more conservative nature. They've lived through a lot more difficult times, and when times do get difficult, they can adjust a lot better. And I think that's a big problem in the West. We've become, any sense of a difficult time, where let's throw a bunch of money out, just hand out money and cut rates and let's blow up. So eventually this has to get resolved, and it might be through the bond market. If the governments are unable to balance a budget, if Doug Casey had a good line about it, said democracy is just mob rule dressed up in a sports jacket, and they'll never balance a budget. These people will always vote themselves out the treasury. They're selfish. They're the mentality today of people is extremely it's childish, and just like
So
it's ridiculous.
so do you think one day they're going to pull the plug on this? Because obviously they can pull it at any time. If they could just let the treasury market die, they can. There's
Yeah,
so many things they could allow to just happen. Do you think at some point, because obviously there's talk about the Great Reset all the time, right? So
yeah.
I mean, we're probably getting closer and closer to that event. Do you think there's going to be some type of black swan event, or do you think obviously some type of false flag that they implement? But do
Mhm.
you actually think they have a plan to reset the system, whether they go into central bank digital currencies or who knows what their next plan is? But what do you
Mhm.
think? I mean, do you think,
Yeah, I
or do you
think.
think they just slowly inflate people to poverty, or a
Yeah,
combination of both?
my my uncle who escaped the evil communist system says, Peter, you think too highly of these people in government. They're not that smart. They're a lot. You give them too much credit, and yeah, you would think, but that's true. It depends who you're talking about. When you're talking about the CIA or the NSA or some of these, the military, these are very professional and highly competent organizations. But
Mhm.
the actual state, local, and federal governments, when it comes to just general stuff, it's just ridiculous. How does it get resolved? Yeah, I think there are, they must have some sort of backup plans, ideas of how they would reset this. I would imagine it'd be very similar to kind of what we saw in 1933 under FDR, where they did an overnight revaluation of the dollar by confiscating, issuing a gold confiscation. You hand in your gold for whatever $20 an ounce, and then was it revalued at $34 an ounce right away. So they basically just stole a huge portion of your money right there. And an interesting thing about that is most private citizens did not listen to the gold confiscation order because gold is so anonymous and decentralized and difficult
Yeah, good
to
question. I've never really looked into that, but like, is there a percentage of people that you think actually turned in their gold at that point? Because obviously, I'm not going to do that if the government says, "Hey,
Mhm.
turn your gold in." I mean, are we talking like 10% of people turn in their
Yeah,
gold?
there's some estimates. I saw as high as 50% and as low as 5 to 10%. And I have to look up this book. I read it some years ago. It's called Gold Confiscation, and I'll have to share the link with you. It's an excellent book that gives insights into this, probably one of the most important pieces of history in the United States. That isn't, we're not taught about it in school, but only the United States and the Soviet Union, the commies over there, confiscated gold, made it illegal to own. Canada didn't do it. No other country did it. It was the United States and the Soviet Union. And it was really a tragic moment, to confiscate personal property in the United States. That is a horrible event. It should be taught. We should understand it and never repeat it. Unfortunately, that doesn't seem to be the case. It seems like that's more of a theme now, is how much can you steal from one another,
Uh-huh.
using government. But
Now, do you
yeah,
think at some point the U.S. goes to back to a gold standard? I mean, I feel like they have to at some point. Whether we go to a central bank digital currency first, and then at some point go to a gold. I just don't see how we can compete with the rest of the world without backing our currency.
right. I don't think it'll be an actual physical gold, like we used to have. You could go to the treasury window and bring in $20 and get a gold ounce or whatever. I think there'll be a domestic currency, CBDC or something like that, but it'll be an international currency that they use gold to trade amongst trading partners to settle imbalances of trade. Because and it goes to BRICS. Is like, what do they do? Like, even the Chinese yuan, like, the trust isn't there yet. It's becoming more. They're trying to make not compete with the petrodollar. The Chinese petro yuan, and it's still, people still don't trust. And the dollar still has so many more benefits and things to it, but yeah, so the alternative isn't there. So the only alternative really is gold. So when the time comes for the dollar to really succumb, when there, it really comes down to trust. When the rest of the world finally rejects it and says we have an alternative to use the U.S. dollar, and I really think that has to be gold. You do see the BRICS trying to trade among Russia and India. Well, all of a sudden, after so many months or a year, Russia's sitting on a pile of rupee, doesn't know what to do with it. So there's got to be a mechanism and a way to solve these imbalances among trading partners. So I think among the BRICS, they'll attempt to use gold as the ultimate settlement tool. When the dollar eventually has its day of reckoning, I think they'll push that off as long as possible. But yeah, I think it's, again, like we said, it's an overnight situation where you wake up and they'll just pull the plug, because they don't want to give anyone really any time to run for the exits and protect themselves. And that's a very important thing, I think, for most people, is the threat of capital controls, domestic and international, become a problem. We don't really deal with too much of that. You don't really maybe realize it. But China, they have capital controls, how much money you can take out of the country at a certain time.
Right.
Or if you want to get out of domestic currency and buy gold, whether in India, the government takes a 15% tax on it. They have gold controls in that way. But there could definitely be a domestic currency and international currency, capital controls, which prevents you from really taking the capital outside the country. So yeah, I think it's, if you have a large, nest egg, if you have a lot of wealth, it'd probably be smart to diversify it in different locations and among different assets and out of the reach of aggressive governments. And yeah.
So when it comes to precious metals, I mean, I know you're a huge gold advocate, and obviously you're very well versed in the mining companies, and you have been for quite some time. I didn't even introduce you properly at the beginning. You are the founder of goldseek.com. I think this year or last year was your 25-year anniversary?
Yeah, well, actually, next year we're gonna be 30,
Oh,
30 years online.
okay. Oh,
Yeah,
wow. It's been that's amazing. Congratulations
yes,
on that.
thank you. Yes,
That's
it's been a
awesome.
long
So,
journey.
oh man, you've gone through some interesting times.
Yeah, yeah. I
Metals has
mean,
been
gold was $300, collapsing down to 250, and CNBC was calling it a barbaric metal. The world we don't need precious metals anymore. We've got PhDs on our side, and we've got intricate derivative. That was actually around the time when LTCM had its problem, when the Nobel Prize-winning finance guys blew up their derivative position. So there was a lot of arrogance at that point, unfortunately, a lot of it could have been, the U.S. dollar could be in a lot better situation if the U.S. would have taken a lot different directions when it came to after what happened with a lot of things with the neocon views and so on. But sorry, yeah. So I've been following the precious metals for a very long time and investing in these mining stocks.
Yeah. So I mean, obviously the mining companies, they just haven't performed well at all. I mean, obviously gold's at all-time highs, and the miners are still way off of the. I don't know how far off are they off on their all-time highs?
Well,
60, 70% or more. I mean,
yeah, I mean, some of them are absolutely crushed. I mean, Newmont was something at 40-year lows recently, and you have, relative to the gold price, the miners are at historic lows. But one needs to understand that why that's the case, and there's a lot to, it's not black and white, but yeah.
what do you think the biggest reason is for that? I mean, obviously there's not a lot of interest because it's a poor performing asset over the past few years. So people like to jump into assets that have performed well over the last few
Mhm.
years, and I think that's one of the things. I think obviously the big money's not in there yet, but I think they're starting to look at that space. I don't know how they're
Mhm.
not, but are you starting to see more interest from the fund managers out there?
There's been a huge shift in the last week. So we've seen, a total drought in new capital financings in the sector. So exploration, junior mining companies, they survive off of raising capital. It's a very capital intensive business to find and develop a project. But I think what we need to understand is inflation shows itself up everywhere, and for mining companies, the inflation shows up immediately because they are at the mercy of a lot of various sources: energy, labor, commodities, service industry. They got to pay their NGOs and pay off all the. There is a host, of things. So the inflation has shown up very quickly. So one thing that a major mining company told me was, "Hey, look, back in 2011, gold hit almost $2,000 an ounce. What did it cost to produce an ounce of gold back then? It was $800, all in sustaining costs. True costs were way, so the margins were very healthy. They did very well. The mining stocks were, they did well. Today, $2,000 gold is not so exciting. $1,500 or so, all in sustaining costs, and that's the average. So you have mines that are, it was a Barrick or Newmont. They sold, I think they did sell. They're selling all their Canadian mines. They were at $1,900, $2,000 an ounce, a break even. That was 3 6 months ago. So there's a lot of companies who are struggling, uh, barely breaking even until now recently. So for an investor, no, you're just watching, the compression of margins, and get real tight. For silver, even more so. A lot of the silver companies, primary silver production accounts is like 30% of all silver comes from primary silver producers. But those producers need low to mid 20s, really near $25 an ounce. And that's just a break even. So where's the incentive to go explore, develop? It has not been there. So we're in interest, and this is not just gold, silver. A lot of commodities face this problem, but gold has had that problem. Silver has a lot more of an interesting story and appeal, but gold is now at the point it's broken past a very defined resistance. The profit margins for the mining companies are really starting to expand again. So give it a quarter or two. The numbers are starting to, the higher gold prices are filtering through, and you're starting to see some really healthy profit increases, cash flow generation, and that's when the analysts, they're going to start to notice and take bigger interest. There were some bottom feeder funds, some billionaires on Wall Street. I think it was right at the end of last year. There was some big funds, a couple $1 billion. They were starting to buy up these cheap assets. So there's some people who understood it and were sniffing it out. But
Hmm.
when you have Nvidia going up like it does,
Well,
and you have all
exactly.
these other things, why do you want to buy a mining stock that might be, could double when something else, you know, especially when the gold price, was hitting 2,000 and getting knocked down, and people were just getting dissuaded, and just it just became a hated sector. So there's a lot of combinations which depressed the price. And if the price of the gold, for an exploration stock especially, if the price of gold doesn't take off, if the sector is not doing well, well, they're eventually going to be forced to raise money. And if the stock price is extremely low, then you face enormous share dilution, and that's a big, big, a problem for investing in the sector. You really have, for the most part, it's not a long-term investment for mining stocks for the, in the sector. It's really a way to outperform the gold and silver price when it's doing well. So you have to time it. It really is about timing. Long-term gold and silver bullion, easiest way, lowest risk.
Sure.
It really, when people, when the whole sector, when people really start questioning risks again, yeah, the gold and the silver really will shine, because people are becoming and will become risk averse. And yeah, so gold and physical, gold and silver. But yeah, the mining stocks are presenting an incredible opportunity. They're starting to take off. I've seen financings getting increased within hours. So yeah, it's starting. So if the price, as long as the price doesn't really get smashed or something were to change, I think we're at the start of a major move in mining stocks. They have been absolutely smashed, absolutely depressed.
Yeah, it's exciting as far as what to expect over the coming years in the mining sector, because I think we know what happened, like you said, in between 2008 and 2011, where you did really well in some of those mining companies. So I think we're going to see something very similar again, and
Mhm.
just like people could actually make 20, 50 times, even 100 times returns. I know that I don't want to tell people to expect something like that, but it's out there. If gold goes up 5 times in the next 5 years, I mean, these mining companies can go up 5 to 10 times that.
Absolutely. I mean, it depends on what kind of risk you want to take. But when you're looking at some of even the mid tiers, their valuations are so cheap. It wouldn't take much for them. They go up 2, 3, 4 times, and they're back to the levels they were years ago, a few years ago. But again, one should look at the charts and also recognize there's a lot of dilution. I think, I like to plot the gold stocks versus the gold price, and that shows how ridiculously cheap they are. But also consider, you got to look at the market cap. If they double their amount of shares, well, yeah, they're that changes, the share price, that metric, that perspective. But they are cheap. They are trading at some of these. I mean, even the PE ratios, but the cash flow and the NAVs and all the every perspective, just they're cheap. I think even from the perspective, and this is what is again ridiculous. The gold stocks relative to the gold price are cheaper today than they were back in December when the gold price didn't break out yet. So the gold stocks have been lagging. Silver, the junior exploration stocks have, and they're just, some of them really are down 90+%. So it has dragged on for so long. So many people have just been flushed out. There's not a lot of share supply down here. So it doesn't take a lot of interest. It is a very small sector, and even more so for the silver side.
Yeah, so let's touch on silver a bit, because that's personally my favorite investment in the world today is physical silver. Obviously, the mining companies will do well when silver finally moves to the upside. So we're finally starting to see silver move a bit. And the reason I am so bullish on silver is because of the demand from an industrial standpoint. I don't really see that same growth on the gold side. Obviously, you're getting a lot of the central banks buying huge amounts, which is driving a big part of that. But on the silver, the industrial demand, the growth is so large, especially with electric cars and solar panels. That solar panel growth seems to be the numbers. There's a lot of debate out there about the numbers not being true with what's being reported, and that the numbers are actually much higher than people have expected. So maybe touch on that a bit, because that's like right now, I think they're mining approximately 1 billion ounces a year, and the demand's between 1.2 and 1.3 billion. And those growth projections are getting higher and higher years to come. So where is this silver going to come from? Because what the part that I don't understand is, obviously there's not a lot of reason to mine silver at this point to just break even, hope to break even. But let's just say silver is trading at $50 an ounce. Now, when these mining companies want to start mining more silver, how difficult is that? Does it take years to be able to start
Mm-hmm.
producing silver from an investment standpoint?
Absolutely. Well, you take 2,000 projects and you get one that turns into an actual mine. Is kind of the
Wow.
statistics of it. It There's a series of things that are needed now. You know, outside of just finding the a deposit, which takes years and years and years, and to develop into a mine. Now you're faced with geopolitical problems. You're having places like Mexico who want to have changed their mining law, the largest silver mining country in the world. They want to ban open pit mining. They're becoming quite unfriendly, especially to Canadian mining companies. There's been some issues. So you're seeing a lack of investment, underinvestment at the same time, as you're saying, as record demand. You have supply deficit, structural supply deficits. And the question is, yeah, where does the silver come from? In the last few years, you've seen silver ETFs, so Western investors dumping silver still. The retail silver guy has been absent, really low demand. Silver ETFs have been selling off. So you've had inventory supplying that, some recycling, but it is getting tight. I don't know how long it'll sustain at these levels if the demand for solar panels continues. It's what it is mandated green energy demand, and
Right.
silver is just
Right.
absolutely needed in a wider range of the electrification, but it's also used in everything. I mean, we have silver in every product basically, from our electronics and so on. And I spoke with a silver company company executive recently. He said, Peter, the thing to also recognize is that silver could go to $100, $200 an ounce, and for most manufacturers, that's not a really they don't use enough silver in each of the components for them to find a substitute. They're not going to
Right.
go and switch that silver out. So you're not going to have it really, like you can see with other, substitute other metals that can happen. So silver, it's needed. It has so many excellent qualities to it. So it is for the industrial use inside. It's growing. It's going to sustain. Obviously, we have this climate change mandated electrification and so on. That's underpins the market. So for me, the downside on silver really is near the production price. You can get some slams in the price where in the paper futures market where that changes. So your downside is quite limited. Now the upside, well, boy, you see what happens when there's a real inventory price squeeze. When really the inventory gets to the point where all of a sudden okay, we're at the low point. We need to secure our supplies, and the buyers just come in and take that out. That's when the bidding war starts, the price bidding wars, and that's when the potential for a real price squeeze occurs.
Mhm.
I think that the industrial side, this demand it could go on for a few years, and the inventories can kind of feed that. But if you get the monetary side of silver shining again, if you get investors coming in and you get silver ETFs going into buying mode, boy, watch out, because here you got gold, it's record highs, and the silver gold ratio is well, it broke below 90, but you're almost at 90. These are extremes. So there's a lot to look at.
To give you a little idea as to how tight the physical silver market is. So we're a physical bullion dealer in Windsor, Ontario, and
That's
when we
right.
saw when we saw bank failures a couple years back, we were waiting 1 week to get physical silver in from our wholesalers. Within a couple weeks, we were waiting 4 months, and that's
Wow.
that's how scarce it is. And the price kept going higher and higher, and we saw so much demand in our store during that time after the bank failure. So, like you said, if there's some type of events where the retail market floods into this silver market again, I mean, it could run out really quick, especially if a bigger bank goes down. I mean,
Game over.
well,
Absolutely.
and
And
when do you
and
when do you think? I'll let you go ahead. You can go ahead and comment, and then I'll ask you a question after that.
Well, yeah, there are suspicions, and there are very large short positions in the silver market. So there are rumors that maybe there are even larger ones that they've been shorting silver through the silver ETF. Ted Butler has talked about his belief that Bank of America might be the one involved because they have huge derivative exposure suddenly in the gold and silver markets. But the bullion banks overall, their positioning has changed. It's not as they've you actually have more managed money market, managed funds that are short silver now in the actual future side. So it's they I think they see the sign. And actually, what's kind of interesting is in the last updates on COT updates last several weeks, it was kind of interesting. The gold side had a lot of options buying. So you saw some bullion big, or someone who was probably short heavily, trying to protect themselves on the gold price upside. What I think is a game changer here is that you really have a huge demand for gold and silver coming out of Asia. You have China starting to take control of the price, whereas the price has been dictated and traded and I think this is actually a good way to say it. Someone says in the West we trade the price, and in the East, in places like in Asia, they actually trade the physical. They're the ones that should be setting the price. We shouldn't
Right.
have these paper casinos that
Right.
very concentrated positions get a play the small speculators on. So I think that's also a big feature is what is a true price, and if the markets are extremely broken in general, all markets are
That
manipulated.
leads me to the next question in regards to the manipulation. And when do you expect, because I'm of the belief that the COMEX will be exposed at some point. SLV will be exposed. GLD will be exposed. Do you actually expect something major to happen where they're not able to deliver, or they change the rules, or some big event that changes everybody's opinion on the trueness of the silver and gold and silver markets, and then eventually people just start
Yeah.
selling their ETFs and just rushing into the physical, and then at that point you won't be able to get it. So what are your thoughts on the end game
Right. Well,
of the manipulation?
right. Absolutely. I mean, if you could go in and try to do redemptions on the SLV, some large institution says we don't trust you. And there has been questions around the SLV. They aren't fully transparent. You got BlackRock who runs it, and JP Morgan as their custodian, and who knows if they're lending that out to other parties and so on. So there's a lot of questions. The COMEX futures market is a digital IOU paper game where very few of the physical that represents all the paper out there is fraction. It's like a percent, or it's nothing. So it works fine until there's actual physical market. When it becomes a true physical market, which is happening right now in the gold market, and the price games that happen in the West no longer seem to work, because all of a sudden you've got China pushing up the price every day. You got China bidding up the existing inventories. There's been a pretty mad rush for gold around the world. So if COMEX, what was that in 2020 when that was happening, it was also became like a true physical market. So yeah, when they're taking real delivery off of that market, then the ability to play these paper games go away, which is happening right now. If there's a true raid on the inventories, then that does get exposed, and that could collapse the trust in this futures tradings, because they've already changed the rules. They've already said, I don't know, it's like 10, 15 years ago, if they ever have an event where they can't deliver the gold and silver to you, they'll pay you out in US dollars. So it's
Right.
they know that potential exists. Obviously the metal doesn't exist there. Enough to satisfy all the contracts. But it's not going to happen until someone very powerful and large like China comes into this. And I think that's kind of just the bigger trend, the bigger game at play, is that the power is shifting from the West to the East. We're playing paper, these paper games here, and the rest of the world, they're trying to, they want to live like us. They want to have the same things. They want to, China would love to have a consumer society where they have an imperial currency to have the rest of the world make them cheap goods so they can live nicely. The rest of the world wants what we have. And they're going to find different ways to do that. And obviously, China has been very aggressive in the last years, de-dollarizing, pushing gold. Now that the citizens and the consumers are buying gold, and this is also, the narrative that only old people like gold, that's not true at all. The main buyer of gold in China are 25 to 34-year-olds, and the main buyer of gold pretty soon, they said in China, are going to be those under the age of 25. So culturally, and there's different reasons for it too, but the government's forcing them into it. And maybe you ask yourself why. Is this maybe more of a state policy as well to blow this all apart? To
Interesting.
if you're pushing up the gold price, if you're sitting on tons and tons of gold, which China has a lot more than they say they do, they would like to see that price eventually get revalued. And what you're doing is you're revaluing the dollar. The gold price is not really going up. It's the dollar that's, that is really being losing its power. And I think that's one way that they're trying to play all this. U.S. isn't going to go away, but I don't think that they're going to remain the world superpower. China, Asia is that's where the energy is. That's where the growth is. Uh, that's where things are happening. I've only been there once, but it was eye opening, and it's a totally different mentality. And you've seen in different parts of the world here too, in Eastern Europe. It's just they live through difficult times. They're hungry, and unfortunately, us in the West, we've lived through very good times, and not everyone, but a lot of people, just the younger generation. I don't know, just things are broken, and the culture, the values and things and the politics and everything is just that's really where the problem is going to be in the end. We the US has been on military adventures. They've blown out, huge deficits with this war welfare state. But in the end, if the people, if the culture falls apart, if the values go away, and people get lost, it's like that. Those are very difficult things to fix. They screwed up things here economically in the communist system here in Czechoslovakia. But as much as they destroyed people's hope and so on, the core values of the people, they weren't fully, something remained, and they were able to fix that. The economics, they were able to fix those problems. But I don't know. I really question if the way society and the culture and things are disintegrating. It feels to me like it's disintegrating. Things are happening very quickly, and I think those core values and what's happening is really playing as much of more influence into the value of the U.S. dollar and the power.
We're definitely, it
Yeah.
just signals to me that we're near the end. I mean, we're near the end game of the financial system, and we're obviously heading into a whole new financial system and probably a new superpower, like you said, China in the East. So I do want your predictions, because I always like to tell people what I think the prices of gold and silver are going to get to, and people kind of look at me like I'm crazy and I'm nuts to think that gold and silver can go up as much as I think.
Mhm.
But let's
Yeah.
hear from you, because you've been researching this market for decades on a daily basis, hours a day. Um,
Yes. Yeah.
I'm of the belief that silver can get above $1,000 an ounce by 2030. Um, Obviously, it would require a lot of different things to happen, such as the COMEX failing. Or where do you see gold and silver? Let's just say 2030. And I know it's impossible to predict, but it's fun to do so.
Mhm.
So where do you see the price?
Well, I think short term right now, it's like in the next year. I After this $2,000 breakout, I was kind of felt 2,700 to 3,000 was kind of our first main target. Silver will break 30, run to that 40 to $50, take a rest, and so on. But longer term, yeah, gold 5, 10,000 easily. I mean, the way the deficits and things are going, but things were to really fall apart, really get out of control. Yeah, the gold price. I mean, what does it matter? A 25, 40, $50,000 gold price may mean nothing, because things have the value of dollars totally disappear. So what is the value of gold versus other assets? And I think that's the biggest threat. But I also don't think things tend to take longer to play out. There's still tricks. There's still things the U.S. can do. They can still pull a few liquidity tricks and strengthen the dollar, but that's going to trigger other issues. So it's like they do this. There's a problem there. It's not going to
It's a
last.
lose-lose situation.
Gold and silver are just one of the few places that you can hide from all these different assets that have been blown up. There's very few things that have the value, and commodities and precious metals are one of the few things that have really in the last decades haven't been blown up. So it's relatively very inexpensive. But as far as I'm a big believer in commodities, but if there's bigger economic issues, precious metals first and then other commodities. But inflation will show itself up, and we're seeing it in copper and other commodities that have been moving up, energy and so on. But gold and silver, yeah, I mean, tiny little silver, you get a big rush into that, hundreds of dollars an ounce. That doesn't seem That's definitely built in there. And that's just, you look at 1980, that was a nominal high of $50. Using the official government lying CPI lies, those liars say the silver price was at a high of equivalent of $200 an ounce. But if you use John Williams' version of the CPI, or the old version of the CPI before they changed it, altered it to their favor, you're looking at silver prices at hundreds, $500, something like that now. But the silver price didn't really go to $50 in 1980 like the gold price. It was kind of a quick spike for hours
Sure.
or half a day.
Sure.
So it was more like $35, and same thing with gold was like $650 or something. But yeah, relatively speaking, compared to the amount of money supply out there, the amount of debt, the amount of risks, but really in the end, it's going to be the debt problems, this massive credit bubble, and the imperial dollar losing its reserve status. That changes. That is really the big shift underway, and that threat. And that doesn't give me a lot of confidence to be in equities or other places. I don't know where you really hide.
Well, that's just it. And then if you look at that chart that I think is the most eye-opening chart, is where you compare commodities prices to the price of the stock market, and commodities are at near an all-time low. And to me, it just seems inevitable that we're at the beginning of that next big commodities bull market, and you start to see struggling in all the other asset classes. So it'll be an interesting few years to come.
Yeah, I think so. And we started the conversation off talking about, I have 2 kids now, so looking long term, it's like, what do I want to put them in? And
Right.
I used to, when I was back in the 90s, I did buy in mining stocks back when in 94, 95, first ones, but I did buy a few other tech stocks, and I was interested in those things. And I do look, longer term things, not everything's horrible. We have to get through this debt issue. We have to go through some issues for things to get better again. So longer term, I would like to find investments for them, but I don't really see many opportunities except for precious metals and commodities. I don't. A little bit of a cash savings account, but it's all commodities and precious metals for them, and I don't see any reason to stray away from that strategy right now.
Awesome. Well, Peter, I think it's over an hour now, so I know you're a busy guy, so I'll let you get back to your day and your kids. So thank you,
Michael. It's nice to catch up with you and see you, and look forward to catching up soon again.
Awesome. Yeah, I'd love to do this again when gold's above 3,000. So we'll definitely do this again. So thanks again, Peter. It's great talking to you.
We'll maybe speak with you by the end of the year then.
Yeah, exactly. All right, buddy.
Who knows?
Take care, man.
We'll see. Take care, man.